Hello, my name is Chad Cohen. I'm the Vice President of Sales here at Credibly. And in today's episode of Credibly Explains, we're going to be discussing the lifetime journey of your average client and how to secure renewals as you move through our process. Most people think that business financing is a one-time event. You apply, you get the money, and then you're done. What if you need more money? What if you need additional capital? Renewals allows you to secure additional capital the entire life cycle of your journey, from your first approval or decline to securing renewals that is tied to your long-term growth is going to be the focus of today's conversation. So what is a renewal? Renewal is a type of financing that allows small business owners to receive additional financing from their current provider prior to remitting or fully repaying their current advance or loan. An example would be paying off or remitting the current financing. The renewal will satisfy any amount on your existing balance, and you will net the difference minus any fees if there are any. The merchant will receive a renewal disbursement doc that will specify the outstanding balance along with the amount that will be deposited into your bank account prior to renewal. For example, you're in advance or loan with a provider. You owe them $20,000. You get a renewal offer for $100,000. The way it will break down is $20,000 of that $100,000 will go towards paying off the previous balance, and you, the merchant, will receive the $80,000 remaining, and you begin a new contract, advance, or loan. Finance providers have different qualifications for when you can apply for a renewal. At Credibly, a merchant who is in good standing is eligible to apply for renewal funding once they reach 45% of the remitted or paid-in amount on their current financing contract. So, what are the benefits of renewing? An opportunity to leverage your relationship with your existing financing provider for additional funds is always in your benefit. If you have a proven track record with your current financing, you may qualify for better terms at the time of renewal due to the trust that you created. At the time of renewal review, you may receive improved term or term length, amount and or factor, and sometimes more than one of the above. Renewals are often streamlined because of that trust. The lender already knows your business and you. This can reduce the friction in your application process. Renewals also allows that you continue building your business on the same path as your existing financing because you know what you're familiar with and you know what you can handle from a financial perspective. So, when should you renew? Renewals allows you to secure additional capital before zeroing out your balance. But a good financing provider, and to be honest, a smart merchant, will make sure you still net enough money to meet your business's needs. As a cautionary note, please be aware of the idea of factor on factor. What that means is you're paying the cost of funds on the entire contracted amount, not on the amount received. For example, as I stated earlier, if you contract for $100,000 and you have a balance of $20,000, you are paying the factor on the $100,000 while only receiving the $80,000 remaining. Now, you need to make sure that you are still netting enough funds after paying or remitting the previous balance for your business's needs. This is the most important thing to understand when taking on a renewal. Renewals are only useful if you can apply enough funds to your business's needs, not if most of the funds are being used to pay off or remit existing financing. Otherwise, you might get locked into a cycle of renewals just to close the previous balance, but not enough money to actually take care of what your business needs. You need to make sure that you have a financing provider that has your best interest in mind and you understand exactly what your business needs. Let me take a quick second to talk about bridge financing and how this can benefit you. Sometimes the timing of a renewal doesn't perfectly align with a sudden opportunity. For example, a large bulk inventory discount or some quick equipment repair you might have needed. Credibly, bridge financing allows you to secure more money in the early stages of your capital investment, a short-term tool to quote-unquote bridge the gap while you wait for a long-term renewal or a larger capital injection. It provides you the speed you need without derailing your long-term financial plan. Let me give you an example of how this looks. Bridge allows you to take your financing in pieces as you have use of funds. When you don't know exactly what you need up front, you take a certain amount and then you realize you need more. This is something that Bridge can help you with. It allows you to take on an additional payment or remittance with additional financing without requiring satisfying the initial contract that you secured. As we have discussed in the past, it's so important to have the right financial partner. A true partnership with your financing provider can help you if you are struggling with payments or remittances, whether it's a loan, merchant cash advance, bridge, renewal. Having the right partner matters. And if struggles come up, you are not alone. We have a team of actual humans here to help you at Credibly should you have any questions or challenges. At Credibly, we're here for you every stage of the trip, from your first application to your fifth renewal. Thank you for listening. My name is Chad Cohen. I'm the Vice President of Sales here at Credibly, and this has been another episode of Credibly Explains.